Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Cronemeyer, Operations Manager for Wickham Financial Group, and I have also here with me Graham Wickham, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy, and thanks for our listeners jumping on the call. Wow, a lot of volatility last week and kind of a flip when we're looking at some of the averages on what performed and what didn't. So we saw the Nasdaq Composite fall about 2% by the end of the week. The S&P was a bit lower, about 1%, but on that flip side, we saw the small cap Russell gain about 3.5%. So we are seeing that broadening out that I've been talking about a bit through these calls and one-on-ones with clients, so on and so forth. So we are seeing that. Sector performance, we saw technology, communications, consumer discretionary all come down. What outperformed last week? The stuff that underperformed, utilities, so on and so forth. Earnings reports, they're starting to come out. We had Alphabet, Tesla, both disappoint, probably putting that pressure on that Nasdaq 100 index, bringing that down about at 3.5%. We did see crude oil fall about 2.3% over some fears of some demand that might or might not be coming from China. From an interest rate front and inflation, we saw the U.S. Treasury yields retreated after the June PCE index reading met expectations. So it's moving in the right direction, which is good. Maybe not 100% on where the Fed wants it right now, but it seems to be in the territory, hopefully moving in the right direction. But from a headline standpoint, we saw inflation up about 0.1% month over month, about 2.5% year over year. And that core PCE number that the Fed likes so much, that it did increase about 2.2% month over month and 2.6% year over year. Now, again, keep in mind, in the height of all this, we had inflation over 9. They wanted around 2. You strip out rent, you strip out some other figures, which tend to be arguably lagging numbers. I think we are getting down to that core 2 area right now. Look at economic activity. You saw the second quarter GDP growing still pretty strong. I mean, with 2.8% annualized rate, that was driven by about a 2.3% increase in consumer spending. So the consumer is still spending, even though we might see it falter a little bit in that lower income side. The S&P Global Flash Composite PMI rose to about 55. The service sector reached a 28-month high of about 56. We look at U.S. housing, new and existing home sales slid a bit in June. And if we go overseas and look internationally, we did see China cut their benchmark lending rate for the first time in nearly a year. Their central bank provided some monetary stimulus in an unscheduled lending operation. We did see the Bank of Canada lower rates for the second straight meeting. And then over in Germany, we saw the manufacturing activity decline, while Britain saw their fastest growth in 2 years. So a little flip-flopped. If we look at the week ahead, look, long story short, it's going to be central bank. They got a decision coming up. They're going to lower rates. Probably not going to lower now. I think the expectation is being put off till September. But what they say and how they said it's going to be widely followed. Then we got earnings. Big time. I think we got a third of the S&P is reporting this week. So we'll have technology giants like Apple and Amazon and Microsoft, a part of those Mag 7s coming out, Meta, all the way to advanced micro devices. So we're going to have a lot of those techs too. So we need to see some reasonably good earnings, if not also projections, to keep hopefully the goodness going, at least on that side of the tech market. We'll get into some labor numbers, some wage reports, some economic data will be coming out, international, kind of the same thing. We'll be debating about some interest rate drops internationally and some economic numbers coming out overseas. Jeremy?
Gotcha, Graham. We always appreciate the information. And to our listeners, we do have our Retirement Planning Today classes coming up here in August. Our first class starts on Thursday, August 15th. So if you or a friend of yours or a neighbor is interested in that, give us a call here at the office or check out our website or our social media, and we'd be glad to have you. And we look forward to seeing you next week.
Take care.